Right, this is Kel from Trade with the Boys. Now, this morning, okay, we saw what happened 2 days ago, whereby the US stock market down 800 points. Okay, it went down 800 points. Then we have the US holiday yesterday because of the late Bush Senior who passed on. But this morning, when the market just opened, we saw a sell-off once again. And this sell-off basically reflecting on the Dow futures, all the futures market. Now, the rationale and reason was given because there are still lingering issue and anxiety of the possible economic downturn or slowdown and all the murkiness around the trade relationship with China. Well, you can see that basically the White House can't give any strong comment and the Chinese did not give any comment after the G20. Seriously, it's only one person talking throughout the whole time, and that is our Donald Trump. So we are not too sure what is going on. Was there something done? Could be. It could be a sell-off now to buy up later. It could be, But the thing now, we are seeing that the Dow futures have went down more than 400 points in the first half an hour this morning. Okay, it did recover, but it's still hovering there. This is going to be very, very dangerous if this is going to be coming out. If let's say Donald Trump really did not really do a good job during the G20 meeting, this is something very, very scary. And of course, the bond market phenomenon has showing the yield curve, the 2 years and the 5 years have inverted. Okay, but not the 2 to the 10. So if the 10 do invert, well, that will actually send a very strong signal that the market could be entering a recession. So we are not too sure yet. It's still too early to call, so do not jump into any conclusion. But let's watch the chart, okay? Let's watch the chart first. Now, this is the chart this morning based on our PSV3. You can see very clearly the market gapped down and sold off, hit the pivot point of ours 24655. Yes, the Dow Jones closes at about 25132, okay, and the thing just gapped all the way down 460 points from the beginning bell. Okay, you can see that. And earlier, then you do a strong bounce up, which is very fair. But again, it succumbed to selling, and once again, and it touches the 24655 level. Now, let us say it up front here. You can look at the big boys indicator. The KSI is still green. That's why there's still a lot of buying interest in the market. That's why you can see the market can't really go down much. But should the market go below 24655, okay, watch this, and the KSI turn red, well, we could see some really heavy selling might be coming on the way. Okay, so how much could it be? Let's take a look. Let me just take away all my lines because that was what I left yesterday. Okay, now where can the Dow be going? Now let's watch the day chart movement. Now this is the Dow. Okay, you can see right here. Now I'm going to be very comfortable to tell you that the Dow, we could see it actually heading towards 24,524 level. It is possible. And in fact, if this level breaks, 24,524 break, we can see it going all the way down to 23,968. And if things get very bad, we can even see 22,948. Now, this is going to be very crazy. I'm not going to speculate this, but let's watch the market, okay? Now, if you look at traditional charting software, you're going to do something like this. You can see very clearly the market is going down. All right, it's very clear on the downside, okay? So now I'm going to speculate for you, just so let's market decide. Okay, now let's look at traditional indicators. Now this is where I get a little bit worried. Okay, let me just show you the S&P 500 chart. Now this is the S&P 500 chart, and I said many days ago, be very careful, because once the two lines, the 50-day MA and the 200-day MA converge each other, meaning become tighten enough, we could see a very big movement coming soon. And as a matter of fact, today it have just happened. So probably there could be program selling in the market that leads on to this, and this is going to be very frightening if this really opens up. Because how we do that, let's look at what happened, okay, some time ago. Okay, the last time when this happened was way long time ago. Okay, let me show you long time ago. It was here. The last time we saw this, it was here. And what happened? The S&P 500 dropped more than 240 points during that period of time of only 36 trading days. I repeat, just 36 trading days, the market dropped more than 240 points. Okay, so what does it mean for the Dow Jones, right? You may want to ask. Let's take a look at the Dow Jones now. Now, the Dow Jones haven't yet crossover. I repeat, haven't. Why? Like? Well, because you must understand, the S&P compromised with the Nasdaq, the OTC market, and the Dow stock. So there is still a little bit different between the Dow Jones and the S&P. But undeniable, we can see that there's still some converging right over here. And very important thing is that you look at it on the when the market dropped by the 800 points. All right, we saw it close below the 20 MA, right? But the next day it rebounded above it. That was pretty okay, though the market was buying on the expectation that it could go higher. But the next day the market comes down again. This is where it gets serious. Now, this is the Dow Jones spot market. It's not a future market. So we are watching it very closely. And if this thing do happen, if we go into what happened back here, okay, you can see right here, this is happening when, let's take a look. This happened in 2015, 31st December, all the way down to February. So that we're still back to the December period again. That was the 31st, okay? So we go back to Dow Jones back then, okay? So 2015, okay, 2015, let's go somewhere further back. Okay, 12:15 coming up soon. All right, should be here. And you can see from that moment, okay, when S&P crossover, the Dow Jones went down by 2,000 points in less than 11 trading days. To a lower point of 30 days, it lost about 1,980 points. So I am looking at the potential of this happening. That means that we might be seeing a 2,000 point movement from where we are now today. Not too sure. But remember, there's a number that I keep on repeating. Two numbers, in fact. The first number will be the 24,255 level, something that I mentioned. So 24,255, and let's put it in 24,255. Okay, this number, the magical number that I mentioned. It went down once, recovered, went down again, beautifully recovered. Okay, the market should be retesting 24,255. Should the market go a little bit more extensive, okay, it might break the low that was done back in June this year, about 24,000. But the next number that I'm actually watching very closely, and I believe that there's a potential that it might happen, is this number, 22,908. Where is it? Oh, it's very far away. It's right over here. So if we just press the chart a little bit more, we can see that it might break, yes, it might break the January low this year. All right, and if this is going to happen, you can go all the way down to this figure. Now, I'm not saying that it will happen within the day itself or whatever, but this is something that a trader has to be very careful. Right, the market might stage a rebound once Donald Trump settles his little sharing. But if he doesn't share things that the market wants to hear, now this could be very dangerous, because we have seen a lot of US companies are not doing well, and there's a lot of ongoing what they call negative news on some companies like Facebook, Huawei, Amazon. These companies, they have some little issue now internally, and this could be pretty dangerous for the whole market as a whole. Okay, so this is Cal sharing view to US market. Remember, go slow, go steady, stay good. Bye-bye.